Welcome back. Intel down some 9% now in after-hours trade. It did have a beat on both the top and bottom lines, and guidance wasn't too bad either. Let's bring in Kevin Rottinghaus from Edgewater Research to break this down for us. Kevin, there's been some commentary that a delay in the release of their 7 nanometer product has been delayed. Is that why we're down 9%?
I think you hit on it earlier. The gross margin number is the disappointing number, and the guide implies a lower gross margin number as well. So I think that's the primary concern here. We'll look for more color on that on the call. Encouragingly, they noted that the 10 nanometer products were still on pace to launch at the end of this year, which I think is a bit of a surprise. We had thought that they may be delayed a bit. So the 7 nanometer certainly look for more color on, but I think at this point the near-term issue is the gross margin number.
I don't know if we can bring up AMD after hours as well, guys, but I think AMD initially moved higher. Would that make sense to you? Is this not a zero-sum game?
Well, I mean, I think the Intel guide also implies a decelerating market in the second half of the year. So that could be a challenge for AMD. But certainly if Intel's delayed in product cycles, on the other side of that, AMD should be a beneficiary of it.
Well, what's your take on the stock and the underperformance and sort of the cautious attitude from the sell side? Not a beloved name right now.
We're actually constructive on it going into 2021. We'd love to see better execution on the product cycles, which have been a bit of a challenge, particularly at 10 nanometer. 7 nanometer sounds like it's a little delayed. So we look for a better conviction in those product cycles to upgrade our rating. But we think in 2021, as they launch their 10 nanometer server product, as they bring more supply to market, they'll be more competitive with AMD than they have been since AMD launched their initial server product line. So I think they're going to start narrowing the gap on the technology and performance side.
So down 10% or so almost. Is this a buying opportunity?
We are neutral rated, but we will revisit our rating as we go. We do think that this is an interesting opportunity with them poised to narrow the gap. It's historically traded at a better multiple than where it's poised to be trading currently, with earnings pushing around $5. So we do think it's interesting. We'll take a look at our rating as we go here.
We're going to see more consolidation in this sector?
Wouldn't be surprised if you did. There's TI has kind of set the bar in the analog space and has really pressured competitors to bring scale in both sales force and product lines to market. So wouldn't be surprised if there were others that scaled higher. Broadcom or Avago has been doing the same type of thing. So wouldn't be surprised if you saw that. Intel has been acquisitive in adding some pieces to expand their TAM. So yeah, we think there are opportunities for additional M&A.